Joining us this morning on Studio 10 is financial expert Dale Gillham. Hi, Dale.
Hello. Finance expert Dale Gillham from Wealth Within. It's nice to see you again.
It's amazing listening to a professional trader who's doing what you're aspiring to do and hearing it firsthand.
Too many people ring me up and say, hey Dale, I want to make quick money, but it's not about getting rich quick. I think we can go for about 4 hours, but I'm not sure my wife would like that. So
I'd say congratulations for putting your time and effort out there, because you probably don't really have to do it. You're successful traders in your own right.
Thank you very much for opening up my mind with trading.
So of course you can succeed, of course you can, and you're the only one holding yourself back or succeeding, and that feels very empowering actually.
A quick reminder before the show starts that this live stream is an educational tool, and as such your personal circumstances have not been considered. We hope you enjoyed this week's show.
Good evening and welcome to the Australian Stock Market Show. We hope you've had a great week and are looking forward to another informative show with us. Tonight we have an interesting lineup of questions and some of our favourite stocks are going to feature, so as usual we could go anywhere and the banter will just continue between Dale and I, of course. And our topic tonight is investing in ASX shares, best telecom stocks to buy in 2021. If tonight is your first time watching, thanks for tuning in and we hope that you enjoy the show. It's great to see that you're making a commitment to learning how to trade the stock market. We really look forward to sharing many pearls of wisdom and gems. You wrote that, didn't you?
I did, I wrote it last week.
With you, that will help you gain better profits from the market. Hello, I'm Janine Cox and joining me tonight is Dale Gillham and we're Australia's most trusted stock market educators.
You don't remember me writing that last week?
I saw you in there today and I was thinking, I wonder what he's putting in there.
Yeah, I put little tricky things in the script.
Yeah, just to surprise me.
Well, you're doing much better now with the script. You're doing much better.
Well, thank you for that critique.
You are. I had a bit of a shaky start there, but how you been?
Yeah, good, thanks. Yeah, it's all the things you've got to think about, and then you've got the producer or the director yelling in your ear at times, so
it's terrible when all these guys are yelling at you and being grumpy at you.
There's too much testosterone in the room.
Most definitely. Well, if you have a burning question for us, please send an email or you can upload a 30-second video of yourself. Actually, I'd love you to do that and put that into Dropbox. So just stick your phone in your face or your webcam on and get a video through to us. And remember, send all of your questions through to info@wealthwithin.com.au. Now remember, before you send the question, you must subscribe to the channel, as we'll give preference to those who are actually supporting the channel and being subscribers.
All right, moving on to the juicy stuff this evening. It is the first Tuesday in the month, and this means we look at the Australian stock market. So let's get into the charts right now, shall we?
Oh, Australian stock market. You can have a go at this because I normally do it every Monday.
You're getting bored of it,
So I would just say, watch my yesterday's report.
Yeah, exactly.
What do you reckon?
Well, looking at the chart there, look, first of all, let's just have a bit of a skim back over the history. Oh, isn't it exciting to see our market pushing forward to that November 2007 high? So in a way, to some people, they might think, ho-hum, that's just boring. Look what the US market's done. But we know, and in your book, it talks about how at times the Australian market will lead the US market. We swap and the US market will take a back seat. Now, there's a lot of talk about the US market potentially taking a bit of a breather at some stage, whether it's at the end of the year or in early 2021, and our market could eventually take the lead. What are your thoughts on that?
I'm pretty confident our market will outperform the US market in the next year, because there's lots of areas in the US market that are a little bit overheated, and there's a long way for them to get out of the COVID issues that they've got. I mean, you want to see bankruptcies, and that's what I was talking about on my Flicks show, or our Flicks show Monday. So if you haven't seen Flicks, go to flixx.net and look at our episode for yesterday. I was interviewing with Jim Beach and we're talking about bankruptcies, and you're looking at JC Penney's is in bankruptcy. You're talking about Brooks Brothers, who I buy shirts from. They're in bankruptcy, and the list just goes on and on and on of companies, and mainly retailers in bankruptcy. And there's
it's concerning, isn't it?
And it is concerning, and there's a lot more to come, and they're expecting a lot more to come. So, will the US get out of the COVID doldrums in the next 12 months? probably more like 2 years.
What is it, 100,000 or a couple of 100,000
So
people?
100,000 people a day, and your vaccine's not going to fix that pretty quickly. It's not. It really isn't. So and it's Jim was telling me hey, some of the data's not fantastic either. So but I do think our market
But during
is
the
better.
times when there's all this flux happening and there's this uncertainty, it's the uncertainty that then creates the opportunity.
Correct. So I think there's a changing of things happening in the US anyway, but our market is looking a lot stronger. We've seen a change in our market. Like we've been talking about energy, materials and financials for months, and the last few weeks energy and materials and financials are doing better. A lot better, where technology slowed down a little bit in the last few weeks. But
it's early days yet. Like this is, there's a long way to go on some of those sectors.
Oh yeah. So before the end of the year, will our market move to a new all-time high? Question.
Before the end of the year, look, I think it could just break through, but I'm sort of line ball on that. What are you thinking?
Well, I think it'll happen probably before the end of January. I'm not 100% certain it'll do it before the end of December.
I agree with you.
But I think maybe by the end of January will be a new all-time high. I think there's good upside. I think it's probably run a little bit hard the last month, November, and I think it's probably going to slow down a little bit. So we might have a little bit of a pullback over the next couple of weeks.
Look, I think we'll have a reasonable reporting season early next year, and that could really bode well for the Australian market.
Well, the news is not that bad on Australia, is it?
And look, the recent pullback that we had, it wasn't as much as what you expected.
No.
So the market's been really resilient.
Okay, second question to you. When do you think we'll be out of a recession?
I think next year, early next year.
Yeah, what, second quarter?
First
quarter?
half.
First half, okay. So it's anywhere between January 1 and 30th of June.
Yep.
I'm going second quarter.
Are you?
I'm narrowing it down. Second quarter, that's what I'm going for.
Fantastic.
But again, I don't think the economic news is still good with Australia, isn't it? Our unemployment's under 7%.
While governments keep spending, this is what I've said in previous shows, on if governments continue to spend like they are, it works and it keeps the economy propped up, and people just think, oh, look at all the debt, they're focusing on the wrong thing.
Yeah.
So in the meantime, we've seen property moving in the right direction. We've seen the government supporting people in their jobs. The jobless rate hasn't been anywhere near what they've been expecting it to be on the downside, so it's positive.
Everything's looking good at the moment. So right now the market is looking really, really good. We're thinking it's going to be moving up through into January, so stay with it. Just pick some really good stocks. To me, I'm looking at those top 20 stocks are going to be giving you some good opportunities. Now, before we get into that's wrapping up our take on the market. Now, before we get into our first viewer question tonight, I really do want to thank all of those who did send an email to us. We had an absolute bucket load of questions this week. I was going to say the other word, Janine, but I didn't want to get into the swear jar. And I must say we're really getting some great emails nowadays. So keep up the effort, everyone. As together, if everybody's asking really good questions, you get better answers and you get more out of Janine and I. But the first question we have today is a ripper video from somebody called Cam. So what's your question, Cam?
G'day Dale and Janine, Cameron here, coming from my studio. I've been watching your show now for a little while. I'm a big fan. Keep up the good work. I just got a quick question for you. Piedmont Lithium on the ASX market and Piedmont Lithium on the NASDAQ market. The prices are two very different things, but as you can see over the last month, the patterns are very much the same. Even if I drag it out to the last 6 months on each one, the patterns are very much the same. But what's the difference between the markets? Because I could either buy one at $29 or buy one at 40 cents. And I'm very unsure what it all means. So I was wondering if you'd be able to explain it.
Do you want to have a go at that?
Yeah, I can have a go at it. I mean, to me, when I first heard the question, I thought, well, it's just two different stocks or two different listings, because you might have, if you've got a dual listed stock like a BHP, it's going to be basically the same price, but you'll get jumping and gapping around. And so I did a little bit of investigation because I haven't looked at it. Sorry?
Except for exchange rate.
Yeah, your currencies and exchange rates, yeah. So, but I did a little bit of an investigation and I found out the US one is an American deposit receipt, which is a different listing. So the Australian one is the company itself, and the other one, or one listed in the US, is American deposit receipt. And basically what that is a deposit with a listed bank, basically, or a bank in the US, and then what they actually do is then you gain exposure. That deposit then has exposure to the share, so it's a way for Americans to actually get into international shares. It's quite a simple way. It's as I said, it's run by the bank, so it's all it is. But just Google it, American deposit receipts, and you'll work out what it is.
Now, the other thing they can do as well, because we actually did ring the company for you, Cam, because it was such a good question, and we loved the screens that you showed us.
Oh, he's a Star Wars fan,
in your
big
studio.
fan. You see his mug and his poster and his little thing.
Yeah, that's awesome. Love that. So, you know, if you want to call the company themselves and ask them, unfortunately they didn't get back to us in time, but, you know, you can call them. They've got a number on their website and make an inquiry and ask for more confirmation or information.
Probably just to finish up, because you were saying I can buy the share for X 40 cents or something, or $28.
It's not a matter of what the price is, it's how it moves.
Correct, it's how it's moved. It's about the percentage gain, so that's what it is. And you'd find if I did some research on those stocks, the two different ones, you'd probably find the percentage move is going to be pretty much the same.
Yeah.
It wouldn't be too much different, because one is basically not a derivative of the
But
other.
then you've got
it relies on the
currency
other.
issues as well that you've got to think
just
about
buy
if
the
you buy
Australian
the
one, mate.
overseas ones.
Yeah, if you're looking to buy, just buy the Australian one and don't worry about the US one, the deposit receipts.
All right. Up next, we have a question from Brian, so you get to press the button this time.
Oh, Brian told me.
Hi,
Do I? What do I do?
Hi, Janine and Dale. I would be interested to see your opinion on Harvey Norman as a medium to long-term trade, or whether to sell because it seems to have significant resistance at 486 and 487. Bought the stock in April 2020 around 267 and looking to protect profits. And he talks about the fundamentals and what they are and seem to be solid. Would be interested in your thoughts, whether you see this current period for Harvey Norman as consolidation with further upside. Cheers, Brian. So, look, we've got Harvey Norman on the screen there if you want to just quickly move to that. I mean, it's already done incredibly well recently with COVID. So this shopping online obviously really worked. I mean, Harvey Norman had their online store set up some time ago. But the other thing with Harvey Norman is that they've got a huge real estate component. Now,
Correct.
For years, the managed funds have wanted Harvey Norman to float that off. And I'm glad had the Cahoolies to actually stand his ground and not be bullied by the big funds wanting a short-term profit. And I think this could pay off for Harvey Norman in the long run. But just looking at Harvey Norman now, I would say it's probably run on a bit. And therefore, if you're looking to take it, it'll be a short-term trade from here if it continues to rise above that resistance there.
He said he bought it at $2 something.
So he's bought it at $2. That's right. So he's obviously done very well here. Now, simple rules could protect that profit from the downside. But if it actually, depending on what your rules are, and I don't know what they are, but there are ways of setting stop losses under lows. So there's a low there that we can see right on the chart there. So if it went below that, we know that it's more likely to go down for at least the short term.
Yeah, I mean, I think it's looking still good at the moment. It has run pretty hard though, but I mean, you are right. I mean, in the US, you've got the big shopping centres now starting to buy some of these distressed retailers. So by Harvey Norman hanging on to the property side of things, because they own the stores. Yeah. To me, that's just smart.
It's a good model, isn't it?
It's a really, really good model. So I think I would hope he would keep on to them. So, but anyway, thank you for that question. So the next one we have is from Lester. He says, "Hi Dale, on your recent YouTube show, you discussed a WiseTech. You said like it, but only as a short-term trade. Could you please explain why it's only a short-term trade, Lester?" No, it's probably a lot of analysis in time analysis and also price analysis, etc. will taught me that, so I can't really explain it to you unless I put a whole lot of stuff on the chart. So, but I believe this is Lester who's already done our course a few years back. So
I mean, because the other thing too is when stocks are rising towards their all-time high, which can be a really strong level for any stock or market, often stocks will either meet resistance close to the all-time high or just after the all-time high. So when we were looking at this stock, that was part of the reason why, because you liked the stock back here.
Yeah, I do. I liked it way
back, down here somewhere. And so that was probably the best opportunity at that point when you were talking about it.
Afterpay, and I'm saying, well, I like this one now.
But then once it had run and gone up here, then your thought was, well, okay, it's run pretty hard. It might have some upside, but we're getting close to the all-time high now. So, even though you've got all the analysis, like you said, overlaying all that, you don't actually, it's not just about the overall analysis.
Well,
it's also simple, looking at the chart to see how far we are from that all-time high. So there still could be another short-term trade in there.
Yeah, absolutely.
It still looks strong. But if it actually goes below this low here, then obviously we'd be thinking, well, there's some downside potential there to watch.
Cool.
Yep. Well, good question, Lester. The next email we have is from Kate. Now, you may have noticed in the script that I had some big text in there, quite a solid wad of text from Kate.
Oh, bucket loads. It was like War and Peace in there
I actually
sometimes.
left quite a lot of her email in there because I thought the ladies need to have a fair go. Don't you agree, guys? Hi, I'm sure you do. It's all about women, isn't it? We had to burn our burn our bras, or our grandmothers had to burn the bras for us to even get to where we are now. We couldn't even have a bank account or something until the
Well, I know why my
70s?
grandmother burnt her bra, because I saw it.
Yeah, pretty bad, wasn't it?
On the line.
Let's not go into more detail on that one.
Same with the knickers, like, ploy. Don't want to go there either.
Okay, focus, Janine. Hi, Dale. I really like the trendline strategy that you explain in your book. The visual of that's just horrifying. And I'm learning more about Fibonacci levels. Okay, we're talking about stocks now. I'm hoping you can answer my question about Afterpay. And I was holding this stock and got stopped out on the 11th of November 2020 when the price dropped down. Now, this is 89.27, so can you just remember that one?
89.27.
Only to head back up again. I had previously tightened up my stop loss, good girl, and level, and set it at 90.08, giving some space below the previous swing low. Can you please shed any light on this? Was it bearish sentiment from many investors wanting to get out at this hour? And then others seeing how cheap it was and causing the price to go up again, question mark? Or was it another phenomenon regarding stops? So she wants to buy the shares back at this price, but she's worried about getting in again. So that's many thanks, Kate. So there we are with Afterpay. Now, a lot of people have got this same conundrum at the moment, which is why I wanted to make a bit of emphasis on this question as well. So it's a really good question, but you know, there's no confirmed trough at this point yet. No. Where the stock is at the moment. Yes, it's come down for a few weeks, but it's trading sideways. It could go back up again. There's always the possibility of that.
Correct.
But we need to see that confirmation before we know direction, because there is none at the moment. So, you know, there's no trend line that I can see that you could fit up under that low there at the moment. There might have been a tighter one earlier on, but now there's no trend line, there's no trough. So it's a real waiting game at the moment.
Yeah, if you're in it, I think I'd be staying with it, but I wouldn't be getting into it right now. And I think as people have seen it come off a little bit in price, some people, because they saw it go over 200% in price this year.
Yeah.
And I did talk about it yesterday on my market report, saying how I think some of these buy now, pay later stocks, they've had their day in the sun. They run hard
but how many times have we said, okay, this stock's run hard, it's run high, and then the stock pulls back and can go back up? That can happen. That's just the reality of the stock market. But what you've always said and encouraged people to do is that if a stock's in a long trend, potentially, stay with it. Or if you're looking to get in, you could get in, but you just need to have a really good stop loss.
Tight stop loss on it. So, and I think this is going to slow down. That's really what I'm suggesting, that these stocks, or this one will probably slow down, probably the other ones as well.
Okay.
Okay, so that's me for now. Okay, thank you very much for that question. The next question we have is from Lynn, another lady. Well done. Dear Janina and Dale, a week after finding your YouTube programs, I purchased Accelerate Your Wealth. Okay, thank you for buying my book. And it was both an eye-opener to my previous mistakes and to the future path of wise investing. I immediately started to make small profits, mostly because I was starting with the tiny residual of my previous endeavours. From May till now, I've made roughly 60% profit. Wow, that's pretty good after reading my book. Fantastic. I really appreciate you saying that. Now, starting with the top 200 stocks, so just doing those top 200 stocks on the ASX. Firstly, could I suggest you look at something to do with the financial stocks in the near future, as you did this week with mining? I'm pretty sure that's on Janine's list. Second, my reason for suggesting this is that I recently bought Bank of Queensland at $6.93, and I've already seen it rise by over 10%. I'm wondering if, not with your crystal ball, but with your knowledge and expertise, you would comment on this share and how you see it performing moving on in comparison to the big banks. Best wishes, Lynn. I think you owe me a beer after. That's a long email. Getting a bit parched here. You have to answer it now. I've run out of words. Okay. A man only has 10,000 words a day, and that was it for me.
Okay, now just first of all, when we talk about stocks, we always look at the long. It doesn't matter whether you're trading short term, days, weeks, whether you're trading months, years, always look at the monthly chart first. That's a discipline that most people who get into the marketplace don't follow, and they get burned as a result of it. So if you look at this chart on the left, you can have a look at the direction. You can see that, okay, Bank of Queensland made a really important low. Now this could be the completion of a pattern on the downside, and we can see across here there's really nice support underneath the current price action with these lows all across here. So to me, long term and medium term, Bank of Queensland looks good. So that's my first sort of roundup of it. We've seen it go up, come back, and it's taken off again, like the rest of the banks. So the whole sector's gone up. But often this share, because it's more volatile than the banks and it's a second-tier bank, often they end up leading the big banks. But, the big banks actually led more strongly than what we expected. Particularly, ANZ was one that led. Commonwealth Bank's taken off. The other two I think NAB's done really well, but I think Westpac hasn't gone on as hard. But if you look at Bank of Queensland, there's a potential for more upside. So somewhere between $8 and $9 is where I was expecting it to run to, and it's just into that zone at the moment. This is for the current short-term move. But there could be we could have a week down.
Yeah, that was my thinking is, we're moving towards Christmas. As we move towards Christmas, volumes drop off, things slow down a little bit. We've run really hard in November, so therefore it would suggest that December is going to be a little bit slower, but not going to fall
Now look
away.
at Queensland property at the moment. I'm hearing all sorts of positive news. Now, this is a long time coming for Queensland because Melbourne property and Sydney property typically have more of a 10-year cycle, and it's a more prominent cycle, whereas the Queensland cycle tends to be more like 15, 20 years before you get that good growth, depending on where you buy, of course. But, Bank of Queensland you'd think would be reasonably well positioned for that. However, in pattern formations when markets unfold, often you can get a move up like this and then it can fall away. So, but the problem with this is you're not going to know that it's falling away until it actually, if it traded below that 614 mark, then more medium term it's on the downside. But you just need some really good rules with this stock, and it does. If you back test this with the stuff that we teach you in the course, there are some awesome rules for trading this stock, short term and medium term.
All right, thanks for that. Great question. Now, the next question we have, I got a second one in a row. It's from David, who says, hello, can I have your technical opinion on Academies Australasia Group Limited, AKG, please? Thank you, David. I've never looked at this stock before.
Yeah, now this one I actually, I skipped past it because his email was so short. And I've actually put it there. There we go.
There you go.
His email was awesome because there was only like one line. I knew that would be an email that you'd love.
Well, after the last one, it's nice and short, so that was pretty good. It's a liquid, so it's a small stock.
Okay, yeah, so it's not highly liquid, as you can see from that weekly chart. It's like the picket fence scenario, isn't it?
You got little donut here.
But can you show us the whole monthly chart so we can actually just step back and see where we are?
There you go. Look at
the
that.
Big picture.
It's pretty CRAP.
It's crappy. Well, obviously from 2006 to 2012 it looks terrible, but there's a possibility it may have come off a bottom there.
Yeah, it is a possibility it's come off a bottom here, but what kind of chances of, is it a long-term sort of thing or is it a short-term thing? This is more of a trader stock.
It's a higher risk thing.
It's a lot higher risk in my book.
And look, a lot of traders wouldn't even touch this anyway.
No, they wouldn't because of the volatility in terms of, look at the volume going through right now and it's quite inconsistent. So, and that's a monthly chart. If we go down to the weekly chart, it's going to get worse, isn't it, really? So it's a lot worse on this one.
Yeah, you want to take the easy part of the run, which doesn't happen really for this share until it gets through this sort of level. Once it gets through these sort of 46 cent mark, it's broken through all that nonsense and noise, and it may then be on a move up. But until that...
Don't be in a rush to jump in of a fear of missing out. There's probably a little bit more upside on it, but you've got to question when you're going to get out and how you're going to get out and what's the trigger. So that's probably the most important thing.
Now we have a question from Mikhail. Hi Dale and Janine. We had a bit of a pullback in the energy sector at the end of this week. We did after a strong run. Looking at its chart, it does not have any sign of a reversal, but looking at individual stocks like Oil Search, there are clear signs of reversal. We've almost an Adam and Eve double tops formed. Do you like that one?
Oh, what's an Adam and Eve double top?
As well as a gap starting at a strong support at about 320 to 325. Will it fall towards that gap and even close it? Kind regards, Mikhail. Great question.
It is a good question. I'm not sure. I'm not sure whether we'll do that right at the moment.
Well, we've had 2 weeks up, so, that's not much. Normally you could get 4 or 5 weeks up on this stock if it's continuing to rise before we get a week down. But, hey, if we got a week down, that would be a really nice little setup on that bottom.
Nice little setup on it. Yeah, I do like it. Yeah, I do really
But if
like
it comes back strongly and goes below $3, of course, our whole view would change on Oil Search.
Yeah. So we do like the energy sector. It's doing much better. It's still in the negative territory for this year, but I do like this stock and I think it looks good, but it might be getting some short-term
Look, this area, as we've said on the show when we've done the energy sector, it's a higher risk area and therefore you've got to have different rules to trade it.
Yeah, cool.
All right, I hope you're enjoying the show so far. We've lots more to come. And before we get into that, now's the perfect time to hit that subscribe button and also like the video. So go ahead, hit that subscribe button now. The more people that do, he'll just stay off my back. If you can help me out, that'd be great. Now it's time to get into the topic for tonight, which is investing in ASX shares. Best telecom stocks to buy in 2021. Now, since listing, investors have continued to hold Telstra shares for the dividend yield, even though the stock's underperformed compared to the broader market. However, there are times when Telstra's performed very well over shorter periods. Now, this is bound to get the short-term traders thinking. Although Telstra is the biggest stock in the communications sector, it may not always be the pick of the telcos. That's something to bear in mind. But like all stocks in the telecommunications sector, Telstra will at times provide good capital growth while paying a reasonable dividend, which is important in the current environment of low interest rates, as you know, where cash is no longer king. But even so, many Australians have continued to park their money in cash. What reasons you might be questioning, but some say they're struggling to find good investments that provide a reasonable income. And as you can no longer rely on banks to pay and accept a return on your money, can you blame them? Well, what is even worse is that once you factor in inflation, the return on interest rates is likely to be negative. And this means your investment is actually going backwards. It's more important to keep an open mind right now, because the opportunity to find good returns in the coming year may come from stocks like Telstra and others in the telecommunications sector. So in tonight's show, we're going to explore the communication services sector and discuss some of the telcos and pick a couple that are likely to be the best telco stocks to buy in 2021 when solid rules trigger, of course. So I had to add that last bit in there.
Well, you did have to,
and the reason for that is
you always like the last word.
No. The reason for that is because I'll never forget one of the seminars we did years ago, because I know that you like looking at Telstra, okay? I like hammering people about Telstra. But in the past, Dale had said Telstra, he called it, instead of TLS as the stock code, he called it DOG. Dog stock. So it wasn't it, for a long time? It went down for 10 years or more and 65% in price or 70% in price, yeah. But things can change on stocks. So, you know, just because a stock has been a poor performer at some stage doesn't mean it can't be the next best thing.
No, but everybody in the audience, you say, who owns Telstra? And they'd all put their hand up. And you say, who owns Combank? And they'd all put their hand up. And I said, who owns another stock? And they all put their hand down. So that was it. That was everybody's portfolio.
That's funny, isn't it?
Combank, great. Telstra, not so great at the time, but now it's looking a lot better. But what we need to do is first look at the communications sector to see how it's performed over time, and then we plan to take a look at Telstra and some of the other stocks within the telco sector. So let's bring up the chart now of Telstra.
All right, so let's get to the start of this workbook.
Let's get to the start of the workbook.
Okay, here I've got...
I'm too far.
No, I'm
too
fumbling.
fast
like, you made me nervous. Excuse me.
I do that a lot of time.
Okay, so you can see here on the left-hand side, I've got a spaghetti. No, some people look at that and think, well, what is Janine showing me? Well, on the left-hand side of the chart, of course, we've got a whole lot of icons, which unless you know the software, you don't know what I'm looking at, but I'm going to put the crosshair on so that'll help you see what I'm about to look at. Now, I've got the bar chart of Telstra, and over the top of that, I've actually got the market. So this is showing you what
our... the All Ordinaries Index or the sector? This is the All Ordinaries Index,
okay. And we've got the sector chart in the bar chart. So the red, blue and green bars, that's the sector chart.
Yep.
Which is basically, well, it's predominantly Telstra, isn't it? Because Telstra is the heavyweight in the sector, so it looks similar, very similar to Telstra. It's dominating the sector. But you can see there that the sector doesn't, and Telstra doesn't, perform in the same way the market performs.
Yes.
It's different.
It's different.
So therefore, it could be a potential that when the market's rising, Telstra may be going sideways, or it could be going down when the market's going up, and vice versa. But at times it will come into line with the market and move with it when the whole market's pushing up. But, you know, just looking at that chart right now, it actually looks interesting. For the first time in a long time, that bottoming formation that we're seeing there is potential support. It's a support level we're seeing.
Well, the difference between this and Telstra is this low here was lower than these lows, where in Telstra it wasn't.
Yes.
There's difference. So it's slightly different, but that's because obviously some of the other telcos pushed it a little bit lower than that. But this looks much better, doesn't it?
It does.
Looks a lot
it's
better.
Looking interesting. So, you know, you have to start looking at this, and that's one of the reasons why we're bringing this up, because when we teach you how to trade, we actually start from the top and come down. So this is why, you know, we're sharing with you this information so that when you go through the course, you can better understand the approach that we're taking and why we go to the big picture, because too many people want to do the fast and sexy and go straight to daily charts right? And I'll never forget when Dale and I were doing a presentation for some students a long time ago, and we were standing there and you showed them a chart and you said, where's the market right now? Is this going up, down or sideways? And they made a call, but they were all wrong.
No, it wasn't students, it was an industry
that was
one.
an
industry one.
Okay, that was an industry one. So I thought it was a Friday night where we had all these people with the students.
No, I did an industry
and they
ones.
didn't know, they hadn't done the course, was it?
No, it was an industry one, yeah.
So you did an industry
I'm
one.
not going to say who was there, because that might be
So
not
this
nice.
was, what you're saying is this could have been financial advisors,
Yeah,
accountants.
could have been
That was
financial
that one.
advisors, accountants, could have been
You've done so many, I've
traders,
forgotten.
it could have been anybody. I'm not telling a word.
Well, I'll never forget what
I'm
you
sworn
actually
to
showed
secrecy.
them, because you showed them a chart which said, okay, where is everything going? And it looked like it was going up, because he was looking at a really short-term chart, but he didn't tell them that. And then when he actually panned back and revealed the big picture, it showed that it was actually part of a counter move that's in an overall decline. So like with Telstra, Telstra looked like it was going up here in 2016 and fell away. It looked like it was starting to move up again in January 2017 and fell away. Basically, you showed them a move that was starting to go up, but it was really part of a fall.
Yeah, correct.
So everybody went quiet at that point, didn't they?
Yeah, it's like you can't see the big picture if you're looking in a microscope. It's really what it is. And I often say to people, you can't see where you are in the stairwell if your face is pressed up against the step. You have to walk back to see the bigger picture, and you can't appreciate fine art until you walk away from it and see it. Like if you were standing in front of the statue of David, and I'm not sure whether you've done it, I have, but it doesn't look as impressive as it does when you're standing at the other end of the hall. It looks amazing. And
I don't know, it depends what you're looking up at.
Well,
Can you see up his skirt?
He doesn't even have a skirt on. That's probably what you're talking about. But let's move on. Where have we got to now? We've got to show us another chart.
All right then. All right, let's have a look at the sector. So
Well,
I
that's
asked you
small.
to change that for me. I can't get a good help these days, can you?
Well,
Because I can read that, but the people watching won't.
Right,
So look, what we've done is we've actually got a list of all the stocks in the sector, and it looks
How's that?
short, doesn't it, these days? When I was going through this list, I was looking at all of the stocks that have been delisted over the years, either taken over or they've just gone completely off the market, and there's a lot of shares in that category. But you can see there I've got the market capitalisation on the right, and Telstra is clearly the dominant stock within the sector, so of course it is going to influence the sector. Then we've got Spark New Zealand Limited underneath that, Chorus Limited, which some of you may not have even heard about, Hutchinson Telecommunications, Vocus, Macquarie Telecom Group and MNF Group. Now, as we start to go down lower, it's really a non-event, because you're talking about completely illiquid shares that you wouldn't even be looking at really. Why would you, if you're wanting to buy something that's lower risk or giving you an opportunity to trade or make some money on the market?
Since we don't have data on TPG, because obviously TPG and Vodafone
That's gone
have merged.
off.
Sorry, here it is. It's still there. It is there, but you would think that would start to get bigger now.
Oh,
It's got
okay. Well, I
Vodafone
haven't
out.
looked at that for a while, actually, since the actual takeover
TPG was a
happened.
great stock to trade for a
Yeah,
while
yeah,
there.
it was.
but, it's just got to settle down with this Vodafone stuff.
Yeah, so once that'll set, that would be a good one though once it does. But look, I've just actually narrowed the field down. So on there you can see the stock name, the stock code. You can see the last price, the change, the security, the dividend that it's paying for the security.
There we go.
The market capitalisation that we've looked at. And then we're going to have a look at a few charts of the stocks within the sector.
Okay, so we need to talk about the dividends. So we're going to talk a bit about dividends first. Did you want to talk about those?
Yeah, so look, historically telecos have been considered that they pay a reasonable dividend. But often these stocks, like mining stocks, can pay what looks like a good dividend, but the share price is falling. So this is what you have to be really mindful of if you're looking for income. You can generate income by actually trading the stock. People are always paranoid about the idea of paying capital gains though, aren't they?
Yeah, but that was classic Telstra. People was constantly, for 10 years, people I'd say to them, why are you holding Telstra? It's falling away. And they go, because I get a good dividend. I said, yeah, but you've just lost 20%, and to get a 6% dividend yield doesn't make sense.
No.
And it's going to continue to fall. So is getting a 5, 6, 7% dividend yield worth losing 20, 30, 40% per year? And that was the answer is no. But as you said, you can buy and sell stocks, pay a little bit of capital gains tax, and that's your income, which could be more than any dividend yield.
Yeah.
But a lot of people, what I find is people want certainty in the marketplace. And what I mean by that is they go, Telstra's paying 5% dividend yield according to what's on the screen. So I'm going to get 5%, regardless of the stock price. Whereas they could
then
lose
they're
20%
They're
on
fixed
the
on
capital.
getting that dividend,
Correct.
aren't they?
Yeah.
Rather than thinking, okay, because you might be able to hold it for one of those dividends, which means you only get 2% or whatever the dividend is at the time, and therefore you might miss out on the rest anyway. So you're actually trying to hold on to a stock for a very small amount of money and risking a lot more, which is what you're saying.
Correct. And that's really, it's about holding stocks that can pay good dividend yields, but also rising in value. You don't want one going, getting a good dividend yield if the price is falling away. So it's about having, first and foremost in everybody, whether you're an investor or a trader, go for capital growth number one every single time. And then dividend is the bonus. And if you are a little bit more...
Capital growth, it needs to change the way that we look at it. So it's capital growth for the medium to long term if you're trading over that time, but if you're trading short term, it's capital growth for income.
Growth, yeah, correct. Yeah.
So look, that's just a rundown of the stocks that we're looking at.
So Spark's paying 6%.
I like this sector because it makes it really easy because the liquidity is so low in a lot of the shares. It really narrows the field down quickly, unlike the mining one that we did. That
so let's now look at the stocks.
Yep.
And we'll bring it home with a bang.
All right.
Yeah?
I thought you were going to say a snap, crackle and pop.
No, I was going to say Telstra's calling.
Okay.
And they put you on hold because of COVID.
Yeah. Actually, Telstra, I think, got into a bit of trouble recently. They've been in the news about putting people into setting accounts up for people who didn't understand what they were getting into. I think that's interesting in itself. So now they're going to change the structure. They may even be splitting off part of the business. Of course, you've always said that they should be a technology company and they're going more that way. So this could be like the rebirth of Telstra through this
they're more
period.
of a media company, which is rather than a telco now because of Telstra TV and book, all that sort of stuff, Big Pond movies, those sorts of things. But let's look at the stocks.
Yeah, now
Otherwise
at the
we'll run out
moment
of
it
time.
looks interesting after coming off that low, the recent low, but it's just gone straight up. There's no confirmation that it's come back to test the recent low. What have we got there?
Yeah, double volume on there, so
Okay.
it doesn't make a doubly better stock.
No, so you can see long term, similar sort of thing that we saw on the sector chart where it's come down to test that low, but it hasn't confirmed that it's going up yet. That's the challenge with this. And a lot of people try to jump in at the bottom being greedy. But if this stock starts to move up more medium term, this could be up long term.
Yeah, my guess is if it does confirm that, then you're probably looking at 18 months to 3 years up.
That's right. So
and would be
for
at
us,
least doubling in price.
18 months to 3 years, that's considered more longer term. So
And that's pretty good.
yeah, I think Telstra's looking interesting at the moment. So that's the first one.
Next.
So good dividend.
Good for your super fund as well.
Potential capital growth, yep. But just to buy on rules, not obviously just to jump in. Now, Spark New Zealand has had a good run. It's a bit volatile at times, as you can see from the monthly chart. With COVID, though, it's been so resilient.
It's a steady riser, isn't it?
It just more or less went straight back up to where it started at, which reminds me a bit of some of the big top 20 stocks like Transurban that bounced back up to near its all-time high. So, but this one's actually still got a fair way to go. It's still got reasonable upside to the all-time high, but it's at an important level of resistance right now where it's trading at. So that's really, COVID or not COVID, it was probably going to stop around that level anyway. But we really need to just see it start to push back up through these highs here to confirm that it's going to challenge that. Otherwise, it could slip back below this low. But I'd still have this on my list, given how it unfolds to trade over time. You backtest this one and you can find a good set of rules
if you can
there
get through
as
that
well.
sort of $5 mark, there's probably 20-30% in this.
There could be a nice run on it. But the challenge will be liquidity on this one. Depends on how much money you've got, of course, to put into it. Like, for an individual, it's probably not so bad, but if you're running a fund, it's not great because you're talking about $4 million a week.
Cool.
And that multiplied by the current price, which is fine for an individual.
All right, next stock.
Okay, the next one is Vocus, which is one of your favourites.
I like this stock.
Yeah, so this stock long term looks really nice the way it's unfolded. It's come off a low, this long term low here, and COVID actually helped pan out that bottom and pad it out nicely. So it's above $4. If it trades back below this low here on the weekly chart, then of course we're talking about a different scenario for Vocus. But at the moment it's not showing any signs of that. While it stays above that level, it's going to look really nice, more medium to longer term, if you can get some good rules on it to trade it.
This is growing.
But it's a bit more challenging in terms of the strategy for this one.
Yeah, you need a little bit more on your feet when you're trading this one.
Yeah.
So is that it, or we got more
This is
stocks?
good for short term as well as medium to longer term.
Good solid company, good revenue streams, all that sort of stuff. So I do like it.
Yeah, so they're the top three picks. You can see I've put them in pink, appropriate colour. And then we've got some in blue, which we're talking about the liquidity's dropping off quite a bit in terms of the market capitalisation as well. I like this share. I think Chorus is great. It's had a long run though, so you know it may come back now. We're seeing a bit of a pullback unfolding. It may come back a bit further to test that. But if it trades back up above that recent high here, that could go again.
Okay.
So that's one I like. Hutchinson Communications is so illiquid.
It is, isn't it?
Right, it's going to be harder to trade. It's potentially you could make more on it, but you could lose more really quickly. And if you don't have experience, you wouldn't even go there.
No.
So looking at Macquarie Telecom, another one I like.
I like that.
Yeah, that's risen really nicely, and it's got this solid support across here. Could be quite good. Obviously, if it trades below that low there of 44.35,
liquidity
you'd have
is
to
a bit
rethink
low,
it.
but I do like it, and obviously it's back.
Liquidity is patchy. It's going to be patchy, but you just if you got on a run like that, then you would just be able to trail the stop up as it goes.
All right.
So look, MNF is another one, but I'm not really sure about direction on this one at the moment. No. It really needs to trade above here. So we've got some resistance there at 550. We need to see the stock push strongly above that to indicate that it's likely to go up, because it could just as easily fall away again.
Okay,
so that's
and last one was amazing, isn't it?
Yeah, and this one's sort of a bit out of the box for you because it's really quite a liquid, and it may come back short term to fill a gap. But this could be potentially a nice one long term for a bit more speculative end. But of course, you tell everybody not to put more than a certain amount, a small amount of their portfolio in there.
Now, Janine, in 30 seconds, just summarise for all of us your overall view on the telecoms right now and your watch list. So just wrap it up.
Yeah, so to wrap it up, I like the telco sector. We don't have a great deal of stocks here in Australia to invest in, but that can make it simpler. I would definitely be watching Telstra at the moment, and I also like Vocus as another one right now. In particular, I would suggest that people also look at, if you've got some, experience and you've got room for a more speculative stock in the portfolio. I think it was CMU we were looking at before.
CMU.
Chorus Limited, but not right now because it's coming back at the moment. Cool. So there we go. There's the wrap up. Now let's get into some more emails. But before we do, remember to hit that subscribe button now. And whilst you're there, give us a big thumbs up and click the like button too. Thank you for that.
Fantastic. Well, the next email we have is from Richard, who says, "Hi, Janine and Dale. Sol is skyrocketing and I feel like I've missed the boat, but signs say to buy. P ratio is not high at 7.4, EPS at 3.981, good, and dividend is 2.05% is average. What a dilemma when a stock is long past where I would buy. Help me, Rhonda, help me, Rhonda." I'm not going to sing that. Thanks, Dale, for reading.
Why not?
For the free book, reading it now. Very best regards, Richard.
You like some of that old daggy stuff.
Rhonda. No, but I need to have a high voice for that, so I need to put on my tight jeans.
Yeah, I think you did.
So no, thank you. Okay. Help me, Rhonda.
I'm just being told that your voice is not
Should have been help me, Janine.
Really?
Yeah.
All right. Washington Sol Patterson and Co. Has gone on ballistic, like he said. But look, all hope is not lost, because eventually the stock will come back and there'll be further opportunities to buy. But look, it is getting close to that all-time high. So you've got you might have about 10% upside depending on where you can get in. But if it comes back nicely and tries to resume the angle of that overall trend from the bottom, you might actually get another opportunity out here somewhere into next year.
You know what I'd say? I'd just go next. You've missed your entry, go and find another stock.
But you still have it on your watch list because it trends nicely.
Yeah, but it's like next, find another one.
So find something that's closer to triggering is what you're saying?
Find something closer to triggering, so yeah.
Don't hang on to a dream.
Well, yeah, I mean, some people like a stock and then they sit there, watch it, and then they don't get into that, and then they miss all the other ones that they could have bought.
Well, that's true.
So that happens at times. So if it's gone way past your buy, then wait.
Yep.
Go and find another stock, put your money in that, and wait for Sol Patterson to do what you needed to do.
Now we have a question from King. He said, "Hello, Janine and Dale and team." I think he meant hello.
Hi.
I was wondering if you could do a quick review of a stock I'm thinking of entering, Infratel IFT. It's been on a quite steady uptrend for the past 3 years, has recovered well from the March low, and has just achieved an all-time high this week. I'm just wondering if the stock has enough liquidity, as it seems to be lightly traded, even though the market cap's at around 4 billion. Best wishes for some more good trading, King. Thanks very much, King. All right, it does look nice. It's just gone to a new all-time high, and therefore, it may come back and test that that resistance there. But
it is illiquid, or sorry, it does have low liquidity. You can just tell by the chart.
Gaps
the
on
way
the
it is.
bars. But
All
it's
the
changed.
gaps.
If you put the volume on there, it looks like it's changed
I was
since
just
COVID.
about to do that. Look at that. Massive volume over the last sort of couple of months since September there, and almost nothing through there.
But it makes it really hard to back test and get a good understanding of how the stock's likely to move and the rules to use to trade it. That's something that I probably wouldn't look at it for that reason. I'd filter it out.
Yeah, I mean, you're looking at some of these weeks there, you know, like 57,000 shares. So again, it's way too illiquid from our book for what we would do, because it just makes it a little bit more harder to...
Why make your job harder?
And that's really, trading is really easy if you've got good rules, and if you don't have good rules, it can become really, really hard. But you make it even harder when you've got stocks that are lower liquid that tend to run a little more on news, and they're manipulated a hell of a lot more and they jump around. So you do need to have a lot more solid rules around yourself when you do that. So just make your job easier. Just go for more liquid stocks. The next question we do have is from a good-looking dude called Majid. I've talked to Majid. He's actually one of our students. So hi Dale and Janine, everyone is talking about a massive crash again in the market and extremely greedy stages of the US market. I wonder what you think we will face in Australia. I'd like to know your thoughts as 1 year total return of the US market was 23.4%, while ours was only 1.5%, same for the last week, which was 2.8 and 1.1% return for the Oz and US markets, respectively. Kind regards, Majid. Well, the year's not over yet, is it? So
that's right.
I still think the Australian market's got a little bit more to go, and the US market, you know, has done very, very well, you know, this year because of the stimulus packages. You know, the US just keeps printing more money and pumping it all in, and people, it just, as soon as they do it, it pumps up the stock market, and obviously Donald Trump's responsible for all of that, isn't he? I'm not allowed to do political stuff now.
Yeah, I'm not going to say anything
I'm
there.
not going to go there anyway, but I'm not. I don't know about
before
you.
you keep talking, I would just want to direct you to have a look at the chart that I've got there for the viewers to look at, so we don't get into any more discussion on that.
So that's the S&P 500.
But S&P 500, you can see there, looks quite bullish, doesn't it, when you look at the monthly chart? So far this month, it's really up strongly. And then we go to the weekly chart, and while it's still up, the last 4 weeks, it hasn't gone on. But it has broken to a new all-time high. So, you know, the fund managers might be a little bit gun-shy at this point and wanting some direction, but it's still got the potential to go higher though, hasn't it?
Correct. But I mean, you know, how many years have you been hearing from people out there
about a crash? Oh my goodness.
About a crash on the US market?
Oh, since after it was not that long after the GFC, probably about 5 years after the GFC, I think it was, they're saying the market was going to crash again.
They're saying the biggest crash in history is coming.
And they kept saying that all the time when the market kept rising, the stocks were going up and up.
But at the end of the day, it's about having... It doesn't matter what the market does. And that's probably strange for me to say. It doesn't matter whether it goes up or down. What matters is what rules that you have around it. So if the market crashed tomorrow, how are you going to look after your portfolio? You're just going to go, oh my God, and put your head in the sand and forget about it, or you're going to get out, or how are you going to manage it? That's what's more important rather than what the market's doing. So as long as you've got plans, and it's like when you're getting onto getting on the freeway to go somewhere like to Sydney or Melbourne or Brisbane or whatever else, well, what happens if you get this happening? You already know what the answer is. And it's the same with the stock market. You just have rules around what you're doing with your buying and selling. And if the market crashes tomorrow, it crashes tomorrow. And if it goes up tomorrow, it goes up tomorrow. And Janine and I aren't worried about either. They're really not. So we just keep doing what we're doing and analysing stocks and buying good stocks and getting out of bad ones. That's pretty much it. Anything else you want to say?
That's fair. But first of all, before we go on...
I want to do some more. Okay.
Just a little bit more. There's always more, isn't there?
There's always more.
So I just want to bring up the chart of the All Ordinaries Index because they're talking about a crash. Now, our market has actually not managed to stay above the all-time high that happened in the GFC yet. Have we moved on? Yes, we have. Are things hotting up potentially? Yes. Yeah. And the market is looking quite strong. So we might actually outstrip this high very soon and keep going, which is what we're expecting, isn't it?
Yeah, I expect our market to do better than the US in the next 12 months.
Yeah, exactly.
Cool.
So look, we've got another one actually.
We do?
Next email is from Julian. Hi Dale and Janine, thanks for the free book, a lovely Christmas gift to myself. I bought a stock code AVA for 42 cents the 8th of October and put a trailing stop of 15%, and it reached an intraday high of 74 cents before pulling back to 56 and stopped me out. around the 28th of October. Now, as I like this company and the fundamentals and technicals, I wanted to stay invested for medium to long term. Was it wrong of me to buy back in immediately at 58 cents with a larger stake and not as good an entry price? Julian, thanks for that question, Julian. Now, what do you think? Should he have bought back in?
You're asking me. I thought
He's
you were
asking.
going to. He's asking. Look, I think you have a problem with your exit strategy, not necessarily your entry strategy, because what I'm seeing there is I'm not sure how you got stopped out of it.
Yeah, so you're seeing no reason to exit.
I've said no reason to exit. We would have exited in somewhere around about 25 cents, and we'd still be in it right now.
Entered, you mean?
Or sorry, entered in around 25 cents. Actually, we probably would have entered in a lot
Based
earlier
on
than
rules?
that. Based on our rules, it would have been probably 15, 16 cents. We would have got in another inch around 25 cents and we'd still be in it right now. Probably your stop loss was too tight. I don't have a problem. If you have a good long-term out view and you've done all your analysis and you think it's got more to go, then there's no reason to not buy it again from that point of view, because if you're buying it, let's say you're buying it at 80 cents or 70, 60 cents and you think it's going to go to $1.20, then that's fine. But if you don't know, then that can be what I would call highly speculative decision.
What was interesting though, it actually found support on one of the strongest levels for this stock and then continued to go back up. So when he bought it back in, it's, in my view, it's not a wrong decision.
No,
depending on where he bought exactly.
I didn't think it was a good exit strategy.
I know what you're saying. But,
not an entry.
But it actually slipped below that strongest level temporarily and then went back above it. So while he may have got out early, like you say, he got back in and it's paying off so far. So.
I think it was fear.
Really?
I'm guessing, yeah. Well,
okay. So look, there's still plenty of upside to the all-time high.
Cool.
One thing to remember though with these smaller stocks is that $1 can be an important psychological resistance level for them. So just watch that level. All right, you're
Mike. Okay, now the next email we've got is from Daniel, who says, "Hi Dale and Janine, I have continued to watch your YouTube live streams, which I've really enjoyed, and have purchased both of Dale's books, Creating a Trading Plan, Trading Logs, etc., as outlined in his books. I'm really closely monitoring the stock VEA, or Viva Energy, and I believe there's a valid trendline on the weekly chart, possibly confirming a change in direction of the stock in the medium to longer term. However, on the daily chart, there is a gap to fill below around 180, and so it may slightly go lower in the shorter term. Would love your opinion on the stock and whether or not you agree with me. Forget about daily charts, mate, straight out, and let's just look at the weekly chart.
I can see heaps of reasons why he could have entered there, like just all the rules that, triggering their patterns and trend lines and other rules triggering along there. But at the moment, it's pulling back. And this is, in our course, there's some really interesting techniques in our course that explain what's actually happening right now, because we're seeing 1 week down. And that's normal to see that sort of move happen after the push up that it's had after that breakout. But even on the monthly chart, those highs are really nice and orderly, like the way that they've formed here in line.
We don't have a lot of history on it though, do we, really?
There's not a lot of history, and we like, at least 3 to 5 years of history minimum if you're trading more short term or short to medium term. But ideally you want 10 years to be able to really get a handle on it.
Yeah, I mean, I think, what he's done there, I think is pretty cool, because he's, he's watched this whole move down, and so, so he's, if I'd put like a trend line across all this sort of stuff, you can see here there's lots of sort of resistance through that level, so you can understand why it's finding some resistance through there. But and I won't draw whatever trend line he's actually put on it, but he's saying it's looking good, but this wouldn't alert me to actually getting out of it. It would just saying it's just taking a bit of a breather. We've had 3 or 4 strong weeks through here, so, and that's what happens. The market will move up, for a few weeks, or a stock will move up and then it'll have a breather, then it'll move up again and have a breather. Now, obviously, this was a downward move. It's quite volatile, so just be careful, mate. It's if I use this, we can see here how the move from that close there to that open there, there's 9.6%, so it's quite volatile. So you're going to have, if it does start to fall away, you're probably going to need to pull the trigger to exit pretty quickly. It's probably not a stock I would suggest you use the rules from my book on.
But one of the rules in the course is really, I can just see straight away that there's a short-term, more aggressive strategy that would work quite well with it.
Yeah, absolutely. At the moment, if I was to Drew saying, okay, so let's put another trend line on this thing. So if I was using the low from the March there, you can see it's running up along that sort of angle. Now it's gone, what I was talking about a minute ago, has gone a lot faster. So it's just coming back a little bit. I think it's just easing off a little bit, and it might go again, but it might be setting itself up in the next couple of months.
Yeah, I like
another
it
month
too.
or two. But
It's
I do
good.
like it, so yeah.
Okay, next we have an email from Gary. Hi Dale and Janine. I should have gained your knowledge earlier as I performed the cardinal sin and purchased some shares after a tip from a friend. It's always a big one, isn't it? Could you look at BYR for me on the next show? I purchased at 23 cents a few weeks ago, now 16 cents. Best regards, Gary. So thanks, Gary, for bringing that one up. It's really important.
So has he done our education yet? Have you bought my book yet? Have you done something else? So
I'm not sure, because I may have cut that out of his email. But just looking at the chart, the monthly chart, it just looks terrible.
Yeah, it does.
It has gapped down really strongly. You know, I would say that if it trades above this high here, 16 October 20, then it could be on the rise again. That's the only really hope for it at the moment. So this is where, you know, a push back below this low, and it could just try to come down to that low in March 2020.
Liquid stock. We've had a huge amount of liquid stocks today.
And this is where you get really can get really caught out, can't you, on these sorts of shares?
Very much so, you know. Whilst there's 10 million shares traded, we're only talking about 16 cents, 10 cents, so it's not a lot of dollars into this sort of thing. So
if it does start to move up and it starts to get a bit of momentum up this way, and this, I'm talking more longer term, but it would have to get, you know, back through 30 cents before we know that it's going up again, really.
I mean, I don't know about you, but I think the biggest tip that I can give is don't take tips, especially from friends.
He knows that now, don't rub it in.
Now. Oh, sorry.
That's like putting salt on it.
I know he knows it, but I was just telling everybody else, don't take tips from friends.
Right.
So
I know you're just trying to help people.
I am, and it is. I don't know how many times. How many times have you heard somebody? Oh, I bought a tip from a friend, you know, and they got burnt, you know, and it's right.
And they're always low liquidity type
they're
stocks,
always
aren't they?
low specky, and there's always some great story about what they're doing. Hey, we're going to drill tomorrow, so it's going to go up 200% in the next 2 months, and it's like, no, how do you know that? Nobody knows that.
Yep.
So, but don't take tips
those
from
people who
friends.
narrow their focus to certain stocks or markets do a lot better, don't they?
Yeah, they do, and it's not about wider.
Yeah.
Okay, the next question we've got, and the final one we've got is from... You gave me the last one, thank you. It's from Bill. He says, hi team, at the tail end of a trading mentor course, a course I should have done 2 to 3 years ago. Thank you for that. Lesson learnt, he says. Anyway, my question relates to Galaxy Resources. I first bought Galaxy in mid-July 2020 at 84 cents, and I've added to my portfolio along the way and now have 25,000 shares. My question is about getting out of a trade like this where the stock is rapidly rising but has the potential to turn around quickly. Is an acceptable strategy to gradually reduce holdings when and if the stock falls, or would a better strategy be to take everything off the table or to take all profits and live to fight another day? Both of these strategies would be based on what the chart is telling me at the time of course. Thoughts? Thanks, Bill. I was about to say that to Bill. I say, what is the chart telling you to do? So that would be my first answer to you. But what have you got?
Look, he's right. It has accelerated so strongly. Now, we call this a blow-off.
Yep.
So when a stock blows off, what are you going to do? It's miles away from any trend line. There's no trough in sight. Often what we do is wait for any rule to trigger. And that's one of the reasons why we have a number of rules in our course, because it's not just a matter, I mean, when I first started, someone said to me, here's a set of rules, go and trade. And it was one set of rules, and I didn't know, I had no idea. And then I thought I was going to be able to make money from any stock. But you need more rules in your kit bag if you really want to be serious about trading the market. So, but I would just be looking for anything that triggered after that, just to preserve your profit, because you don't know what could unfold from here. But in saying that, if you couldn't back test, if they don't know how to back test, they need something, don't they?
Well, he's just finishing in the last bit. So in the last modules, he's learning to back test and stuff like that. So he's getting to that little bit. But to me, is it a sin to take some money off the table? Right, he's in good profit right now. If I said to him, just take your capital that you put in off the table.
You still
and
need to have
profit.
some rules,
So
right? So
what is it?
It just may be that when a stock blows off, he could go to a shorter time frame.
Yep, correct.
Potentially look for the same rules. So the rules in the Trading Mentor course might trigger quite early on the daily chart, right? So we don't normally tell people to take rules on the daily chart, but if you're looking to take a profit from something that was actually rocketed off, that can be a logical place. Now I've just buggered that up.
Let me do it. Yeah, there we go.
Thank you. You saved me.
Yeah.
All right, so you can see there it's still strongly up, and there's no exit strategy from our Trading Mentor course there yet, right, to trigger. So you would just stay with it.
Yep.
So this is where having confidence in your rules and having done all the analysis and proving it to yourself that you understand it really helps a lot.
But you don't get that
doesn't it?
overnight. It's about practice and putting the rules
Yeah.
into play and testing them, and then you get that confidence. So right now you're under control. You really do have control over what the situation is. So, you know, really do set some rules around that. What would be the line in the sand for you? If it fell to a certain point, what would that be based on the chart? So that's really what we're telling you to do.
Yeah, I mean, the stock's at a really important level from a historical point of view. So it could pull back from here. However, it's also got, the history shows that it tends to run to around $3. So, yeah, interesting stock.
Great. All right.
But should he be trading that one?
No, but he's already learnt that.
Okay, last week we asked you to tell us, have you finished? Sorry.
Yeah, I'm finished.
Okay, he's finished.
I was finished before I started.
I thought I was going to have to put a shoe in his mouth. Okay, if you had to buy one stock for someone for Christmas, what would that be? And who are you buying for and why? Now, Dale picked a response. I didn't even get a say in this one. The response that he picked was from Claire. So you picked a lady. That's lovely. Evening, Dale and Janine. If I bought one stock for a Christmas present, it'd be for my nan, as she has inspired me to trade the stock market. How awesome. After many successful years trading the FTSE, I'd buy her WHC as it has crossed the downtrend line and I'm looking positive. Thanks, Claire. How awesome is that?
Whitehaven Coal's been looking really good.
Yeah,
so
awesome.
Well done.
Gee, your grandmother must have really a strong fortitude to trade stocks like, you know, to be happy
on
to
the FTSE.
Have a stock like that. Yeah, she's amazing, isn't she?
Yeah, that's what she said. She would have bought Whitehaven Coal for her grandmother because she's inspired her. But anyway,
that's beautiful. Awesome story. Thanks for sharing that one.
No, I liked it. Out of all the ones, I thought that one was the best.
Yep.
So well done, Claire.
Okay, tonight's question, so get ready for this one. If you think the market will be up or down by the end of December, so which one is it? And at what price will it be? So you tell us that. So get typing below. Where do you think, will the market rise or will it fall? And what price or what value will the market, so that's the All Ordinaries Index.
At the end of this year.
Be at the end of 2020.
Fantastic.
All right. Unfortunately, we've come to the end of tonight's show. I'm disappointed. I wanted to keep going.
You are keeping going. You've got to keep reading.
We hope that you've enjoyed the discussion tonight and thank you for participating. Remember, your questions are important, so don't let them go unanswered. And also, if you have a topic that you'd like us to discuss, send in your ideas and we'll look at your upcoming requests for our shows. And just remember to hang on for next week because Dale is going to be dressing up next week. So he thinks he's not, but we've already picked out.
There you have it. Okay, remember to hit the subscribe button and like the video, and also remember to share your video of tonight's show on your social media with your friends and colleagues so you can help them keep informed. And remember, as the show grows, we can deliver you more interesting and informative topics. Now, also remember to put the show on your calendar for next week, as we'll be right back here on YouTube Live every Tuesday, 7 to 8 p.m.
I'm waiting for your
What are you
reaction.
laughing
You
at?
think I'm joking, don't you? And I'm just waiting for you to turn around
is
and just
joking.
acknowledge the fact that you were going to be wearing something. If you would like to have your question answered on the show, either send your question in an email or remember a video question will have priority. And you can reach us by emailing info@wealthwithin.com.au and type Wealth Within Live in the subject line. Now, you must do this before 3 p.m. on Tuesdays to get into that night's show. And look, we do apologise if your email didn't get into tonight's show. Just remember to send it again next week and try to get in early. So send it straight after the show.
Cool. Well, we really hope everyone enjoyed the show tonight as much as we have bringing it to you. And as always, thank you for joining us. And we do hope to see you again next week. For now, goodbye, good luck and good trading.
Bye for now.